What is up, everyone? Dan here, Crypto Capital Venture, October 2nd, 2019. I hope you're doing well. I'm zoomed in on the daily chart on Bitcoin. It's like a week. Bitcoin just seeing resistance below this red 200 moving average on the daily chart. It's not looking good. And this is with, an oversold environment. You look at our momentum oscillators, right? Bitcoin could break above the 200 moving average very quickly. It's only around $8,500. It could happen so fast. And just like that, we could be above it, right? And then we'd be talking about, are we going to have support there? But we do this often. We zoom in on the charts every day and we try and get an idea of what Bitcoin's going to do next on the short term, even on the 4-hour charts. Where's it going to go next? And I like doing it. It is fun. However, it really goes against my approach to Bitcoin accumulation, which is buying the dip, right? So often I will have to remind myself of key strategies and key approaches in these markets, and this is one of them that I really want to share with you. I haven't shared it on this channel for a while. Really, it's overextension between the 50 moving average and the 200 moving average. We have this blue line, the 50 moving average on the daily chart, and this pink line, the 200 moving average on the daily charts. So these two things really differentiate the bull market, the bear market. They really give us clear illustration, right? So for instance, in a bull market, oftentimes what you'll see is just Bitcoin just floating above the 50 moving average, right? And then in a bear market, Bitcoin seeing resistance below the 200 moving average, right? So it's a very clear picture. There's such easy indicators just to pull up on the screen at any given time and see where Bitcoin is. When you pair those indicators up with things like the momentum oscillators and you take historical data that we have with these oversold conditions, overbought conditions, we really get a clear picture of what might be the best time, when might be the best time to accumulate some Bitcoin or buy the dip to our best calculations, right? Nothing's guaranteed. But between these moving averages in any market, here's what happens. Overextension, right? There's this gap between the two because Bitcoin is kind of this parabolic thing that just kind of goes crazy. We not only get overextension from the moving average itself, but we get this overextension between the two moving averages, this separation, right? It's a lack of consolidation. And so these are things that we really should always keep on the lookout for, right? And I just went back, I just charted a few times because this is really what I'm talking about. So here's Bitcoin actually out of that last bear market, 2015, just seeing parabolic gains. Here's that big move, November 2015, exiting the bear market, putting in a swing high to a higher low, right? And then kind of continuing an uptrend. And every parabolic move on the shorter time frames, you see Bitcoin just getting some key separation between this 200 moving average and the blue line, the 50 moving average, right? So here's right now around 35% right there. Here's around 40% overextension. And when we get into an environment like that, right, and Bitcoin is kind of in this trajectory of putting in higher highs and higher lows, that's when you really should strongly anticipate consolidation, a pullback, right? And you can see it happen time and time again. And actually, that 40% overextension right there is a key Fibonacci area as well that we talked about in terms of the cycles of Bitcoin. That key Fibonacci resistance at the 786 to 618. So moving along, if we look at what's been going on, and by the way, this happens in a bear market as well, or in a downtrend. We have this separation of the two moving averages. The bottom of this past bear market, 37% right there from the 200 moving average to the 50 moving average. And that happening while Bitcoin just on its way to just oversold conditions. It's a very good indicator to keep track of. When you're looking at the charts, you don't really think to measure that space and really keep an eye on it. But something similar happened recently, right? We can take it right here is around 65%. We can take it from right here. Again, still overextension is 60% range. Way overextended, right? There needs to be some consolidation. What does consolidation look like? It looks like the 50 moving average kind of coming back down, approaching the 200 moving average. And that is extremely common in a bullish trend, right? So I wouldn't say we entered the bull market yet. However, we're definitely in a bullish environment, and I think we still are from December lows. So with that being said, we have the same exact thing happening out of that last bear market. We get these nice parabolic gains for a short term, and then a consolidation, 50 moving average, gravitating back to the 200 moving average. We have to keep eye on this illustration here because it really gives a clear indicator, right? So even if Bitcoin got another leg down, and we'll talk about what that might look like in a second, even if it gets another leg down, 50 moving average coming really close potentially to the 200 moving average, this could be in a continued uptrend, right? That consolidation is extremely healthy for Bitcoin. So with those things being said, I want to go over to a tweet from earlier today, like an hour ago or so. I just tweeted about Bitcoin, what it's doing. I got this comment. It's not a bad comment, but I want to talk about it. It provides good context for the charts. Joe said, a drop to the 618 fib at 72.80 would represent a 40% correction, and a drop to the 786 fib at 54.95 would be a 60% correction. Both would be somewhat unprecedented, as past corrections at this point have maxed out at 41%. Although this is crypto, anything can happen. Totally agree with that last point. This is crypto. He laid out the numbers really nicely, right? But I wouldn't say it's unprecedented. I would actually say it would actually be normal if Bitcoin fell into, here's the 618 to 786 range that he's talking about. Would this be, especially the 786 line from this swing high that we had back in June, this would be around 60%, right, to the downside. But again, that is not something we haven't seen in Bitcoin. And we see these Fibonacci retracements to this channel, the 618 to 786, so often, whether on the zoomed out charts, which is what we're doing right now, or even on the zoomed in charts, right? Zoomed in on the daily, zoomed in on the 4 hour. We see them often. Even the inverse of that 786 to 618 channel, we have this swing high to swing low, where we just saw resistance, right? And this is often the type of thing that we want to see Bitcoin do, is kind of bounce off of these 618 to 786 channels, right? So this is a resistance channel, and this would be a support channel. So falling anywhere down to $5,400 for Bitcoin to put in that next lower low would just be a higher low for Bitcoin in a continued uptrend. It's not a bad thing, and it would make sense given the consistencies of the 618 to 786 channel that we see on Fibonacci. These are my thoughts for the day. Let me know your thoughts. Are you bullish? Are you bearish? Just let me know in the comments below. I just want to know. I'm just anticipating everything right now, and we'll see what happens. If you're here and you're not a subscriber, hit the subscribe button. I would love to have you as part of the channel. I will see you in the next video. Have a good day, and God bless.